Let's talk markets. It has been a big week for the markets after the inflation data. Also, a number now from some of the bank earnings. We can talk about JP Morgan. We can talk about all the different banks. Joining us right now is Mona Mahajan. She's a senior investment strategist at Edward Jones. Good morning to you. The banks, it's a blowout. Yeah. It's a blowout on the banks. Do you want to own the banks right now?
You know, we think financials are interesting here. Keep in mind, they are a domestically oriented sector. We're not going to see as much impact from any tariff-related news. They are levered to an economy that's moving higher. And yes, they will benefit from not only the better labor market data we saw last week, but the better inflation data as well. So we think it's a good environment for banks. Deregulation, another factor on the horizon as well. And
you don't think that they've gone too far already? I mean, are they priced to perfection?
You know, we think a lot of the parts of the market that still have room to run are those non-mega cap tech, non-magnificent parts of the market. So yes, financials have moved, but from a valuation perspective, certainly not to even near historical levels. And so I think there is scope for valuation expansion and certainly scope for earnings growth in that sector as well.
On the growth stuff, yeah. the Magnificent Seven, whatever you want, he would call them the MAGA Seven.
MAGA Seven now. I think they're all on board.
What are you buying? Are you selling? Are you standing pat? What are you doing?
You know, I think the standing pat and holding, look, we want to make sure, we talked about how the theme for the last 2 years has been you got to own that Mag 7 if you want your portfolio to perform nearly as well as the broader market. The theme for the next couple of years is really you got to own Mag 7, but you have to make sure you own some of that value cyclical parts of the market if you want your portfolio to hold up. So diversification, we think, remains in control over the next 12 to 18 months.
And so what would you buy, just broadly speaking?
Yeah, you know,
I mean, broadly, very specifically.
Well, you know, for a broad investor, we think U.S. large cap and mid cap makes a lot of sense here. We think that broadening of market leadership theme makes a lot of sense here. So if you own a lot of the tech AI, make sure you're complementing that with financials, to your point, but also industrials, maybe even parts of healthcare. We also remain neutral on EM and slightly underweight international, so non-U.S. developed. We also say in the bond market, there's some opportunities developing, especially as yields have moved higher here, extending duration a little bit in the investment grade bond market makes a lot of sense here, too.
What wouldn't you touch?
Well, we remain underweight international for now. We do think that the U.S. exceptionalism story continues to play out. We are seeing that not only with the Mag 7 and some of those productivity drivers of the economy housed here in the U.S., but we think international still is weighed down by lower growth, some inflation scares, central banks playing some catch up. So not quite there yet on that story.